So quantum computing stocks have been on a wild ride. We've seen incredible highs and got many of us, myself included, emotionally invested. But recently, dramatic drops have reminded me of an important truth. You see, investing is not just about the numbers, it's about the mindset as well. And I recently revisited the reality of transurfing model, a fascinating approach that's really helped me in certain times to stay grounded. And I applied what's happening in the quantum stocks to this. From this, I've distilled 5 powerful lessons for you guys to disengage emotionally from some of the pendulums of quantum computing, stay focused, and start to invest smart. And when we say the emotional pendulum, we just mean that when a pendulum has more weight, when it swings, it's going to be harder to stop. And essentially, we don't want our emotions when investing to get so large that it is destructive for your trading or investing strategies. Now, before I dive in, I want to mention that this video is powered by Stockmate, so my platform for analyzing stocks. Surround yourself with other traders and investors and watching me trade live every day at market open. Link in the description for access. It's that second link down below. So guys, lesson number 1, volatility is the price of innovation. Emerging technologies like quantum computing are inherently unstable. The market is still figuring it out, and we got all these different things that are going to be stocks that really aren't worth investing in. And it just means that we need to expect some of what is this roller coaster. Take Amazon in the early 2000s. It dropped 90% during the dot-com bust, and today it's one of the most valuable companies in the world. What's the lesson there? Don't let the short-term price swings distract you from the long-term potential. And my number one takeaway in any industry is volatility is normal, and it's the cost of being ahead of the curve. So lesson 2 is to focus on the fundamentals, not the hype. We want to trade fundamentally strong, valuable companies, even when there's big spikes or big crashes, that you know you're investing in something that's valuable. Hype is a pendulum's bait. It's that excitement, the flashy headlines, the price jumps. But remember, guys, the fundamentals drive the long-term value, not hype. Even if you're trading on the short term, you want to make sure you're investing in companies like this. So are you asking yourself, is this company making progress? Are they landing partnerships? Are they turning research into real-world applications? And if you can't answer those questions, it's time to pause. You got to rethink what you're investing in. Real value lies in what these companies are doing and not what the people are saying about them. And the same thing is true for companies that maybe talk bad about quantum computing or that it's really far away, but they're still heavily invested in right now. It's just watch what they do, not what they say. Lesson 3, and this applies to traders and investors. Diversification protects you emotionally and financially. You never want to dump everything into one place just for a short-term gain. Biotech, there's AI, there's space tech, there's all these different places you could be investing. And it's not just about reducing the financial risk, it's also protecting your mindset. When you're all in one sector like quantum computing, every dip feels like this personal attack. And so you got to spread your investments across different industries. Look at some of the innovative big tech as well. You'll stay more balanced emotionally and financially. For example, if quantum computing stocks drop 40% like they just did, gains in other areas like AI or healthcare can stabilize your portfolio. So keep yourself grounded, and this is what's going to help you clearly assess your next move in the stock market. Just because quantum computing stocks are doing good doesn't mean you can't also just go from stocks altogether and check out maybe wholesaling real estate or buying some crypto or investing in other markets that are going to bring you higher returns, or even investing in yourself with some extra money that you have so you can learn the skills to be able to take advantage of some of the opportunities that are always happening in the markets. By diversification, I don't just mean your finances, I mean your overall energy and where you're investing. Lesson number 4 is one that's helped me a lot, and that's long-term vision beats the short-term emotion. There's so many different timelines you could look at with short-term price swings, a lot of V-shaped market dips. That's something that you're going to have to go through and adopt as a long-term mindset, that quantum computing is a marathon. It's not this sprint. The winners are going to be transformative industries that often take years to develop and emerge. If you think back to Tesla, it took years before the market truly recognized its value. So the same thing most likely is happening here. Patience isn't just a virtue, it's a strategy as well. It's like when we start a short-term trade, we wait for that right at market open sell off. And a lot of times, if you're in our live sessions in stock made at market open each day that we have, then we sometimes will sit there and wait a couple hours just to see that dip starts to confirm that it's going to start recovering. And a lot of people, they don't have patience, and I've done this before myself, but most beginning investors do this, is where they buy the falling knife and they think, oh, it's going to recover, without being patient to wait for that indication of a recovery. Lesson number 5 is emotional detachment is your superpower. Okay, there's all these different charts. I could look at the all-time high from $1 to $20 on Rigetti, and finally, this emotional detachment is where, when you emotionally react to things every time something rises or falls, you feed that pendulum and lose your own energy. So instead, it's important to become an observer. When quantum stocks rise, analyze why. When they fall, do the same. Stay curious, not reactive. This approach helps you make rational decisions, and not only based on emotional ones. Emotions do play a role and can help you make some of your good decisions in your life if you're speaking to your gut, but ultimately investing, you want to detach emotionally, stay focused, and remember that your energy is your most valuable asset. So you don't want to invest in things that might zap your energy or put you at a big risk to lose energy if it doesn't go your way. So there you have it, guys. 5 lessons from the quantum computing stock pendulum. And these lessons, they're not just about stocks, they're about how we navigate life and this volatility that will inevitably happen, and how you can do it with clarity and purpose. So if you're ready to take your investing game to the next level, check out StockMate. It's that second link in the description, and it's designed to help you analyze stocks in quantum, AI, tech, and space. And no matter what market you're in, you'll be able to do that effectively. So again, it's that second link down below. Let me know in the comments, what's one lesson that you've learned from investing in these volatile markets? Let's keep the conversation going. And if you guys found this video helpful, make sure, if I earned it, hit that like button. Do consider subscribing, and I'll see you guys in the next video. Take care.